So the first slide, which is slide number 2, is overview of the topics we're going to discuss and what our objectives are for this morning. So we're going to go through the basics of the private foundation form. We're going to talk about the layout and the purpose of each part of the form. And then we're going to talk about some of the tax compliance reporting that happens on the 990-PF. And PF serves multiple purposes. One is that you calculate the net investment income that private foundations must pay. You make sure that they're making their minimum distribution requirements that are calculated. And then there are multiple questions that get asked just for federal compliance issue. Private foundations came about through legislation that was enacted in 1969, and it was a result of people using private foundations in ways that were abusive in the view of Congress. And so these tax laws came about, and they've been evolving slowly ever since. But the 990-PF is the tool that the IRS Treasury uses for compliance with federal tax laws, as well as collecting the excise tax. So we're going to go through basics of private foundations, the form, and then correcting some of the common errors that we see in the preparation of the 990-PF. Okay, so the first part is just private foundation basics. There are 4 basic types of private foundations. There's the non-operating foundation, which is what I think most people are familiar with. Those are grant-making foundations. So somebody puts assets into a private foundation, which is controlled by an individual, a family member, a close number of people, maybe a corporation, and it makes grants. It doesn't actually conduct any direct charitable programs itself, or very few direct charitable programs, and it's a grant-making organization. The second is an operating foundation, which looks an awful lot like a public charity in that it operates a charitable program on its own behalf. It is not making grants out to other organizations to carry out charitable activities. It actually is operating a museum or operating some other sort of charitable activity that does not qualify as a public charity because it does not receive sufficient public support or is not, a school or a hospital or that sort of medical research organization. The third type is a subset of the private operating foundation. It's a private exempt operating foundation. This is different. There's a common misunderstanding that that's the same thing. They're actually very different. Private exempt operating foundations, and I have a slide that will go through exactly what that is, they are exempt from having to pay the excise tax under Section 4940 on their net investment income. They are also exempt from the expenditure responsibility requirements when one foundation makes a grant to another foundation. So they're private exempt operating foundations are actually beneficial. They're also fairly rare. The third type is a conduit or pass-through foundation, and that is something that's just determined from year to year, and that's where a foundation, the amount of contributions it receives during the year, it in turn passes those out for a charitable purpose by 2 months and 15 days after the close of the following tax year in which it receives the contributions.